I think what's happening is it's been intentionally shorted so that authorized participants can take the metal. Because I think we have a silver shortage. People need the metal. They're going to get it wherever they can. They know only the authorized participants, by the way SLV has been set up, can redeem the baskets of shares for the metal. Everybody, this is Rob Kientz with goldsilverpros.com. It is Tuesday, October 11th, 2022. Hoping you guys are having a great week. And the purpose of this video is to talk about what's going on with SLV. And to set this up, the reason I want to talk about what's going on in SLV is not because it has anything to do with the average person getting physical silver. It doesn't. I'll show you that in a moment. What it has to do with is there is a correlation. I don't think it's causation, but there's a correlation between SLV and the derivatives markets and silver, meaning when SLV fund flows are falling or the shares are selling off, typically that's at a time in which the silver price falls and vice versa. It's not a 100% match, but generally people in the paper markets, whether they're doing the derivatives on Comex or doing the SLV as a passive ETF fund, excuse me, will think about silver in the same way and generally go the same direction. So there is a correlation there. And lately we've been having a falling SLV share price. And I want to explain, I think, what's going on, because not only we're having falling SLV price, but actually the shares are being liquidated and silver's being pulled out of the fund. I'll show you that. And there's something counterintuitive going on. I just want to discuss it here for a moment. So we're going to get straight into the share screen. I've got everything set up for you. I've graphed out right here SLV, the silver trust right here on your screen. Let me make that a little bit bigger for you guys. You can see that here on your screen. And I pointed out basically at the top where silver squeeze movement starts. You can see it up here. Silver squeeze really started at the end of January, beginning of February last year. And that's when people went into SLV and were bidding up SLV because they want to try and squeeze silver. 110 million ounces of what was in the London market, because that's where most SLV silver is stored. Not all of it. Some is stored in New York, but I think about 3/4 or so from looking at the documents on SLV are stored in London. And so what happened was 110 million ounces over those 3 days, the last two trading days of January, the 1st of February, was silver squeeze. People went to SLV and 110 ounces were allocated in London to SLV. And so it got an influx of silver because people were demanding shares. And then we started to see a runoff on the London Comex markets and SLV selling off after silver squeeze. And I think people generally took this, especially generalists took this to mean, well, SLV selling off, nobody's interested in silver. And that's quite the opposite of what's going on. As you guys know from following my channel, I've been documenting the runoff of silver stocks on both the Comex and the London markets, which are two main repositories for silver, at least industrially, also for investment demand in the Western world. Certainly there are other places you can get it, but they're two big ones. And they're the two biggest stores of millions of ounces of silver, right? Well, there's been a big runoff. We've had, gosh, I want to say, without looking at the numbers, about 70% runoff in silver and Comex. Don't quote me on that. Go back and look at the numbers, but it's been the majority of it since silver squeeze began, since here. So if that's and also London, recently I put up on the channel how London has seen a precipitous decline in silver. Of course, if you want to follow the London markets, I recommend Ronan Manley at Bullion Star, who does that. Excuse me, guys, I've got allergies, so I'm doing my best to make it through this one. But Ronan Manley's a good guy to follow at Bullion Star if you want to follow the London market. I follow him and several other people that cover the London market, and I also look at the charts and things as published by LBMA and other sources. And what was funny is all the silver's been run off. So what's going on? Why is this happening? How can there be such incredible investment in industrial demand for silver? Remember, the last 4 years, we've running a silver deficit from a yearly mine supply perspective. The industry is demanding more than the mines can put out. So 2022 would be the 4th year, according to the Silver Institute and Metals Focus, which does the research. If that research is valid, and I have no reason to believe it's not, probably the most comprehensively put together research on that subject that we can find. Certainly not without errors, I would imagine, but probably the best data resource. So we know we're in an era of declining above ground silver inventories, declining supply when relatively speaking to demand. And we know that silver deposits getting harder to find. We know that physical is being drained out of the Comex. It's also being drained out of SLV. I'm going to show you that here. If you look at the screen, this is the silver ounces held. This is silver squeeze, and this is now. And the overall silver ounces held in London for SLV has fallen from almost 700 million to just under 500 million. So you're talking a 200 million decrease. That means that the authorized participants are redeeming shares, but silver SLV is falling. So everybody wants the physical, but silver price is falling. Well, I've talked about Comex before. Let's talk about SLV this time. Why does SLV even matter? Why does any of this matter? Well, as I said, a lot of generalists get into this. If you're getting into it through, your retirement account or through some sort of fund, this is a passive ETF and get exposure to silver. But there's some things that I wanted to point out. And I'm going to go here to this is the actual prospectus on SLV. It's on iShares.com. You can see. I want to read something for you about how this all is supposed to work. So the trust issues shares, I'm on this paragraph, only in baskets of integral multiples thereof and only in transactions with authorized participants. Okay. You cannot redeem or destroy a share unless it's the authorized participant doing it. If you're selling a share in the retail market, you sell it basically back to the authorized participant. They're the one that take the basket of shares and redeem it for the silver. That's the mechanics of how that works. Individual shares are not redeemed by the trust, but are listed and traded on NYSE ARCA under the ticker SLV. The trust seeks to reflect generally the performance of the price of silver. The trust seeks to reflect such performance before payment of the trust expenses and liabilities. Okay, so on and so forth. So what you learn by reading the prospectus, I've read through it several times. The only people that can redeem shares and actually get silver out of the coffers of SLV are the authorized participants. And you can go and they'll tell you who they are. It's the usual, bullion bank type people. That aren't that many of them. I won't go over that here. I'll do a deeper dive on that later. But a lot of the same suspects that play in the derivative markets and play elsewhere in the precious metal market play in SLV as well. And they happen to be authorized participants. Of course, JP Morgan is the custodian, and then there's a trust which runs it, so on and so forth. The price of SLV is expected to lag silver because the expenses are taken out of the fund itself. And so eventually it will have a little bit less performance decremented for the amount of management fees for the people that are running the trust. And so SLV will never 100% track the price of silver. It's always going to fall behind a little bit, but that's a fairly nominal amount. It's not like we're talking 5 or 10%. It's a lot less than that. It's a normal management fee. So we expect SLV to lag silver price a bit because of that dynamic. But what's happening is we've had a free fall crash from about $27 to somewhere around $17.50, whatever it's trading at now. At the same time, silver is being pulled out. Now, usually when shares are redeemed in an equity, that's actually bullish. I'm going to take you to Investopedia. This is an article on stock buybacks. So are stock buybacks a good thing or not? There's controversy around this, something I've written on Seeking Alpha about it in the past before. But I want to bring you to something that most market participants believe happens when you reduce shares in any equity. It generally means a buyback will create a level of support in the stock price. So, for example, what's happened in the last 10 years during this area of easy money is a lot of companies took on debt and did share buybacks at the same time. That put a floor under the price of their share. Why? Because you're destroying shares. Well, if there's X amount of demand and less shares, it means price should go up because there's the same amount of demand for less shares. Okay. Now, if you had issued more shares on top of what you already had without destroying any previous to it, you would think the share price would fall because there's the same amount of investors but more shares. That's why when you dilute a company by issuing a bunch of shares at once, investors generally don't like it. They do like buybacks if they plan on being in that share for a while because it tends to support the price. So why is this not going on in SLV? We have a redemption in silver here. You can see here, and yet the price is falling. And you would say, well, Rob, that's because there's less demand. People are redeeming shares. Sure. But you're also creating less shares in the market. And remember, the retail guys, when they sell the shares, can't get the silver. It's not like people are selling their SLV to get the silver. Okay. They may be selling because silver's not at a great price. But when you destroy shares and you still have X demand, you would expect the price to go up, not down. So what's happening is SLV is being liquidated right now. And the price is going down. Why is that? When you destroy shares in an otherwise equal environment, assuming demand hasn't just cratered, which I don't think it has, because physical demand for the metals is really strong, then it's counterintuitive that the price should fall. And one of the reasons is because there's this big short position on SLV. And so this site Fintel tells us what it is. Right now, the shares are short 59 million. Source is the New York Stock Exchange, okay, where SLV trades. And 59 million shares short. I've seen this go as high as over 60 million within the last few weeks. And when you have a short interest on a stock, it tends to depress the price. When people are borrowing shares to short it with the expectation of buying them back at a cheaper price later, that's what shorting is. It generally puts a downward price movement or downward price pressure on the stock. I think it's not the redemption into silver by the authorized participants. Remember, the authorized participants are the only ones. Sorry, let me get back to the document. The only ones that can redeem the shares. It's not the individual shareholders. You have to do it in 50,000 share buckets. It has to be an authorized participant. It's right there in the prospectus. So why, when destroying all those shares over time, this price has been falling when the physical demand for silver is nuts? You would think that investors who want to get access to silver, who are buying everything they can in the open market in terms of ounces, along with the industrial sector, which needs silver, would also be buying up SLV. But I think what's happened is everybody's going after physical. And it's the short position. Let's go right here. Sorry. It's the short position that's causing the price to fall. And it's allowing these authorized participants to go and redeem out all the silver, right? All the silver is coming off. And if you want to look at, what we see here, it's actually been positive over the last 4 weeks. Have been more added. There's been a little bit of a positive move in SLV, but over time, it's really fallen. And this positive move is tiny. If you look at it right there, it's basically nothing. So the overall trend is authorized participants taking metal out. That should create some additional support for the share price if share prices on SLV traded the same way share prices trade for other market instruments. But we know it's different because you can't get access to the actual silver itself. And I think what's happening is there's awareness in the market that SLV is not really the right proxy for a lot of silver investors. I think people are going to physical, and I think that's why the physical is coming out. I think that's why they're redeeming shares. But I think the price is being held down by the short position because you can call it, short interest. You can call it, vultures coming after SLV because they see a falling price. It's not like SLV's great or anything. It's still at 1750. It's probably disingenuous that this many shares are being shorted on it. At this time, it's a ton. And if you look at the off exchange short volume ratio, 45%, and it's also 3 days to cover. So you need 3 days of all SLV trading to cover these 59 million shares. That's a lot. So this ratio of 3.11 days to cover shorts is really huge for any equity. It does, that's essentially what's happening. What I'm telling you is happening is they're liquidating silver off SLV. The short interest is keeping the price down so the market doesn't notice. So SLV doesn't explode and cause passive investors to say, hey, wait, silver's doing something, to cause the money managers to say, hey, wait, silver's doing something, to cause the market to invest in silver. And why does that matter? Well, let's look at the COT report. We'll do this real quick. There's one little piece I wasn't going to throw in there, but I'm going to throw in this extra piece to explain what I think is going on. So let's go down. Give me a minute while I get this loaded. It's right here. Long format metals. This is the latest as of October 4, 2022. You saw me just pull it up on the website. Let's look at silver on the Comex. So silver on the Comex, if you look at the passive money, it's the managed money. They have gone net short here by about 3,000 contracts. So while the bullion banks, the swap dealers, or no, I'm sorry, that's copper, excuse me. Excuse me, guys, will I get to silver? The managed money is almost net short. They've taken a position of 37,000 contracts long, 32,000 short. And the swap dealers have gone long. So if the managed money or the passive investing is long 37,000 contracts, it means they're overall bullish on silver about 5,000 contracts at 5,000 ounces. So why in the COT report, in the derivative market, managed money has gone long silver, and yet we have this shorting position on SLV? That doesn't make sense. If managed money is the one that's managing money into ETF funds, and SLV is the primary passive investing mechanism, ETF mechanism for silver, why are there so many shorts there when the managed money is net long on the derivatives markets? And I think here's my theory. I think, let me come off the share to discuss this. I think what's happening is it's been intentionally shorted so that authorized participants can take the metal, because I think we have a silver shortage. People need the metal. They're going to get it wherever they can. They know only the authorized participants, by the way SLV has been set up, can redeem the baskets of shares for the metal. So they buy their shares. They, with the short position, keep the share price down so they can get them cheap. They recycle the shares by redeeming them, and they take the silver. Now, where does that silver come from? If you're a client and you buy 50,000 shares of SLV, or a group of clients that have bought 50,000 shares, and you want the silver, you go to one of these authorized participants, JP Morgan or any of the ones that do it, and you say, go buy me a bunch of shares. and oh, we've got it to 50,000 as a group or singly, we want to redeem these, authorized participant redeems it. That's how you get your silver. So maybe they're going to Comex and they're not getting delivery of what they want, because we've shown on our videos how hard it is to get it off of Comex. We have this 4-year running mine supply deficit. The mines can't make enough. So you could try to go do a contract with the mine and definitely do it. But you're not everybody's going to be able to do that, right? But the supply chain is short silver. So what's happening is this short position on silver is keeping that price down on SLV, for the short on SLV, while they redeem the silver out. Okay, but nobody really knows, because it's counterintuitive, because usually when you destroy shares, prices go up. That's the general expectation of most equities. It's not happening on SLV. And I think that's what's happening. So there's a run on SLV going. That's why I did this video. I think it's pretty obvious when you look at the data. And that's just another confirming factor showing us that, hey, people want physical silver. So if you're following along with the derivative market created price for silver, it's 17, 18 bucks, whatever it is right now. I'm not even looking at the chart this morning. I don't pay too much attention to that, other than I kind of have to follow the industry, but I don't pay attention to that from a supply demand perspective, because it has nothing to do with the physical market. And you see what happens when another equity in the space, which has a correlation to the derivative market, is being shorted so that shares can come off. And then you see the futures being shorted, and people staying for delivery and taking the silver off. You can see there's a liquidation. There's liquidation in silver everywhere. So this basically video is put out basically to say there's a shortage condition brewing in silver. Silver squeeze never stopped. What I said in January, February 2021 was that people are going to run the physical. It's happened. That prediction has come true. And I think it's being run off everywhere. And we're going to continue to cover it. But that's how that works. And a lot of people don't know how that works. I wanted to explain it. And I wanted to show you, if you're in the market and you're interested in silver, either you've already bought or you're considering it, the fundamentals of the physical supply and demand trade are extremely strong. And the derivative prices are not reflecting it for reasons I've been covering. That what it creates is a situation where if you want to do arbitrage between where silver is now and where you think it's going to be in a shortage condition, the arbitrage is go get your physical. You don't want to get into the derivatives complex because they're being held down while the physical is being drained. What you want to do is get in the physical. And then if you believe that silver price is going to go up because we are in a shortage condition, like I think the data says everywhere that we look at it, then that's a way that it could be a positive investment for you. I'm not your investment advisor. Don't take this as investment advice. Please do your own research, consult your own financial and tax advisor, to all that kind of stuff. Standard disclaimer I have to put out there. I'm speaking to a group about something that I'm interested in and providing data and research and analysis. You have to make a decision whether you want to invest. But I know what I'm doing. I see shortage condition going from yellow, eventually moving to orange and red as we get down that, sort of color chart of where we are. And I think we're getting closer to orange and to red. And I think it's going to start going faster as the market participants figure it out. And so I think what's going to happen is this is just going to accelerate. So again, if you're interested in silver and that's something for you and you've done all your research and consulted your financial advisor, now may be the time to do it, because it definitely looks like if this run continues, the last 4 years we've had of silver shortages and production, and on top of that, we've also drained out all this excess inventory from the exchanges, from SLV and so on and so forth, where silver price has to go. And that's the thesis here. And I think it's pretty obvious what's going on. When you look at everything holistically, if you guys haven't had time to cover it, that's why you come to the channel. We do that for you. But it's counterintuitive to what a lot of people are saying. And that's the point I wanted to make. Because SLV price is falling in this particular circumstance, it's actually bullish for what I showed you, not bearish. And that's really the message that I want to deliver. This is going to do it, guys. Thank you so much.